Fear nearly stopped me 33 years ago. Today I'm going to tell you how I got over that fear. I'm also going to show you a little clip on Thomas the Old Investor, a little thing that you can watch. It's a great little story about an old man who actually achieved success over time and actually mentored a few people along the way, maybe a bit like me. We'll get to that in a moment though. For those of you who don't know me, I'm Rob. For those of you who do know me, I am still Rob. This is Trading with Rob, of course. It's Rob's Logical Trading. We have the live shows Tuesday and Thursday where everybody joins us and I show you guys how to trade. My channel is here to show you guys how to trade, but by the same token, to give you guys that little bit of information regarding all the mistakes I've made over the years and how you can avoid making the same mistakes. Also, that trading is a 50-50 game. Trading's not as easy as everyone makes it out to be. You can't just get into trading and, woo, I'll make money and it just falls out the sky. It's not that simple, and this is where a lot of people go wrong. You see, when you get into trading, you take a course and you think, ooh, look at that. I can have a win rate and I can win 7 out of 10 of my trades. I can just trade. I can just make so much money. And then you find out when you get back to your desk and you actually start trading, you get this shock and awe and you start losing money and you think, what happened there? What went wrong? Well, let me tell you what went wrong. You didn't understand that it's not about charts. It's not about lines. It's not about algorithms. It's about your psychology. It's about what's in your mind. And there's a little thing called fear, which is affecting your trading, which is affecting the way you invest your money, the way you put your money out there. Now think about it like this. It looks really easy to get into trading, right? You think, oh, I'll get into trading. That looks good. Look at that guy. He's got 15 Lamborghinis and he's got all these things going on here. And it just looks so good. I've got to get into this, and I'll just take all my money and I'll just throw it at that and I'll just triple that money in a week or something to that effect. Maybe you've only got a few $1,000s that you want to play with and you're expecting to somehow double that money. The more you invest, the more fear you've got. Think of it this way. If you were going to go and start a business today and you were going to invest millions of dollars into it and it was all the money you had in the world, the fear would start to kick in. But if you were a billionaire and you're just going to invest a few $100,000 in someone's business, it's kind of low risk and you're kind of thinking, it's small change to me anyway. It kind of has a different psychology to it, doesn't it? So if you now get into trading and it's your last pensionable amount of money and you start trading with it, that can be quite daunting. In fact, every dollar you lose, you're going to start feeling the pain, and that pain is immense. It's an immense amount of pain they're actually going to feel when you start trading. And that fear, how do you overcome that fear? Well, I'm going to talk to you about that in a little bit. But first, guys, go and watch this little show I've put together for you on this old man. Have a look at how you can make money in the market, how you can become an insanely wealthy trader over time. The art of trading is what I call it. This is an artistic way of looking at it. This is the art of trading. Check it out.
In the heart of London's bustling South Bank, nestled between the iconic houses of Parliament and Big Ben, there's an unassuming antique shop that's been drawing curious visitors for over 30 years. What started as a hobby for its owner, a retired stockbroker named Thomas, soon became a full-time passion. But it's not the antiques that draw people in. It's Thomas himself, a man with a twinkle in his eye and stories that could make even the most jaded heart skip a beat. Thomas is a seasoned investor who's seen it all in the market. He's navigated the treacherous waters of bull and bear markets, weathered economic storms, and emerged wiser and wealthier each time. But he's not just a successful trader. He's an artist, a poet even, and he sees the stock market as his canvas, his poetry, the rise and fall of the market trends. As the years went by, Thomas's shop became a hub for young traders eager to pick his brain, to learn from his decades of experience. And so it was one rainy afternoon when a young trader named James walked into Thomas's shop. He was a wide-eyed, Eager to learn, Thomas took him under his wing, sharing the secrets of the market that had eluded him for so long. And here are the lessons that stood out for James, the young trader. Lesson No. 1. Know when to strike. Thomas taught James that timing is everything in trading, just as it is in life. You have to know when to take action and when to hold back. A novice trader might jump into a trade at the first sign of a trend, but Thomas taught James to wait, to be patient and to strike when the iron is truly hot. Don't trade because you're bored. He would say, trade when you have a good, solid reason. This lesson resonated deeply with James. He realized that the market is like a vast ocean, full of ups and downs, and you need to know when to dive in and when to stay on the shore. Lesson number 2. Don't put all your eggs in one basket. Diversification, as they call it, is key to surviving the market's wild waves. Spreading your investments across different sectors and asset classes can cushion the blow when one investment takes a nosedive. Thomas recounted how he'd seen investors lose everything when they put all their money on one company, only to see it crash and burn. Diversification is your life raft, he'd say. It might not make you rich, but it will keep you afloat. James took this lesson to heart, restructuring his portfolio to include a variety of investments that could weather any storm. Lesson number 3. Be adaptable. The market is in a constant state of flux, and what works today might not work tomorrow. You have to be willing to change course, to adapt to new circumstances, and to learn from your mistakes. This lesson was driven home to James when he saw a highly rated stock that he'd been eyeing suddenly tank. He'd been so sure of his analysis. But the market had a way of humbling even the most experienced traders. Thomas told him, "The market is like the wind. You can't control it, but you can adjust your sails to catch the current." That's when James realized that the market isn't a place where you impose your will, but a place where you collaborate, where you dance to the tune of its ever-changing melody. As the rain continued to pour outside, Thomas's shop felt warm and inviting, filled with the aroma of fresh coffee and old books. The antique clock on the wall chimed, marking the end of their session. James stood up, his mind buzzing with the day's lessons. He looked at Thomas, his mentor, and thanked him for the guidance. "You've given me more than I could have ever hoped for," he said. Thomas smiled, his eyes twinkling. "Remember, the market is an art form," he said. "And you, my boy, are just getting started." James left the shop that day with more than just knowledge. He took with him the spirit of adventure, the thrill of the chase, and most importantly, the belief in himself as he ventured into the rain-washed streets of London. He knew he wasn't just a novice trader anymore. He was an apprentice to the art form, ready to take on the world with a newfound confidence.
How did you like that story, guys? Was it rubbish? I don't know. Let me know in the comments. If you didn't like it, I won't do it again. Promise, won't do it again. I just thought it would be nice for you guys to see a little story like that. That was so good. I just enjoyed it. And I thought you guys might enjoy that as well, because very much it's an old man, just sort of like me, that's kind of showing you guys how to trade, maybe. I don't know. But let's get back to, how do you overcome that fear in the markets? How do you get around that? Because that can be quite a terrible, daunting, painful thing. That is difficult. And you've got to find that balance, because the balance is where you're at. The balance is the problem that you have to start with. How much are you prepared to risk at any one point? It depends a lot on how wealthy you are to start with, how much of your total wealth you're investing, whether it's all of it, half of it, or just a small portion of it. That does make a big difference to how you will feel when you're taking losses. Whereas if you invest everything, you might feel total pain. And if you're just investing a small amount, like I said earlier, it might be just a flick in the sand. That does make a big difference, but that's not what makes the difference to how you overcome the fear, because the fear is always there, whether it's a small amount, whether it's a medium amount, whether it's a large amount. And you will find your balance. You will find that balance of what you're prepared to take a knock on. But to get over the fear, what you have to do is learn to understand that you're going to lose in the markets, and that the stock market, the Forex market, the crypto, any market, any of these charting markets is a 50-50 game. And 50% of the time, you might actually win, and 50% of the time, you might actually lose. Well, that sounds insane. That's how it is. If I flip a coin 10 times, there's a good chance it'll land on heads 5 times. It'll land on tails 5 times. But if I told you you can have 2 for every heads, I don't know anyone that wouldn't choose heads, because then the odds are in your favor, aren't they? Then suddenly this whole coin flip is yours to win. You can't lose. Now that you understand that the market's a 50-50 game, no matter what system you've got, no matter what course you've been on, it's a 50-50 game. You actually don't need those indicators. You don't need those charts. But the charts are good to be there so that you can manage your risk, so that you can take a high probability trade. When you take a trade, you've got a chart there. You can see, well, it might go that way because that happened in the past. It'll happen again in the future. So then I'll take that trade. That's what the charts are there for. The charts aren't there to predict the future. Charts can't predict which way the markets are going. You can't predict which way the market's going to go. When you do backtesting, you've got information as to what's going to happen next. So you do the backtest and you know what's going to happen next. So you kind of do things according to what you know what's going to happen next with. Try doing forward testing. In other words, take a demo and try and test it forward. Take something and run it in the background for a week and try and take trades with nothing in front of it and see if you can get it right then. Because that's a completely different ballgame, isn't it? How do I overcome that fear? Well, the first thing, once you understand that trading's 50-50, the next thing you have to understand is that in leverage trading and swing and position trading, we're not talking about day trading yet, just normal swing and position trading, like I talk about here in the 4-hour charts, 70% of traders lose money. In other words, 60 to 80% of traders lose money at any one time. So now, on average, about 70% of traders lose money. And we all think we're going to be part of the 30% at the top for some other odd unknown reason, but you're not. And the next thing you do is you get bored and you go down to the 5-minute charts, which makes you a day trader and it's high stakes and all the rest of it. There, 99% of traders actually lose money. Once you get your head around that, then you have an understanding that charts are not going to make you the money. Systems are not going to make you the money. The only thing that's going to make you money in the market is a business plan and a strategy to make money. And the only way to do that is to actually make more on your wins and lose less on your losses. And how do you do that? How can I do that? How can I possibly implement that into my trading life? How can I bring that into my trading life so that I don't lose money, so that I actually make a profit when trading? Because charts can't predict it. I can't predict it. So how am I going to win anything? Basically, you can throw a dart at the chart and choose which way it's going to go. I've actually got a subscriber right here on this channel right now who works out his trade from whether his dog barks or not, or he tosses a coin. Says, I'm going to buy this because the dog barked. And that's it. That's his trade. But he uses my strategy. He strategizes his trade. He manages the risk and manages the gains with a business plan. That's what makes the money. Doesn't matter. You can pick 10 random trades and you can just go buy, sell, buy, sell, buy, sell, buy, sell, buy, sell, buy, sell. If you manage those 10 trades according to the strategy, you should come out profitable at the end of the day based on just odds alone. That's how it works. So what you got to do is you got to turn around and say, I'm going to risk the same amount on every single one of my trades. And this has now becomes dependent on the size of the account you have. Let's say you have a $100,000 account and you've opened this account and you're going to make loads of money on this account because you're going to live off this account. So every year I'm going to kind of double this $100,000. How are you going to do that? I don't know. Because just think about what you're thinking. How does anyone double their money anywhere? Where can you go and double your money? That's kind of ridiculous when you think about it. But okay, you've got your plan. You're going to double this money every year. Now you've got your $100,000 account. So what I do from my side is I risk 1% on every single trade. And my reasoning for using the 1% and not 2% and not 5% and not 10% is 1% if I lose 10 trades in a row, which is gargantuan and it shouldn't happen. But if I do, I lose 10%. of my entire capital, which is recoverable. But if I risk 10% per trade and I lose 10 trades in a row, then kind of I'm in trouble there. They're probably going to go to zero. You don't want to do that. But it's up to you. You risk whatever you want. But the thing you have to remember, most importantly, is to risk the same amount on every single trade. Do not change the amount. Keep the amount the same. Always keep the amount the same. Otherwise, you're wasting your time. If you shop and change the amounts, and because you think you trade the S&P better than you trade the DAX or whatever the case, then you probably will lose money because you'll get it all wrong and you'll get it all upside down and you won't do it right. That just is how it is in life. So just keep it the same across all the trades. It doesn't matter which trade you take, keep it the same. And I keep it at 1%, so that's $1,000 per trade risk. And now you say, okay, but how do I risk $1,000 in every single trade? Because every single trade's got a different stop loss, got a different area, it's got a different profit target, it's got a different price, it's got all these different things going on because every trade is different and every trade's got its own life, right? Well, it's easy. What you do is you look at the trade you want to take, and the first thing you do is stop thinking tight stop loss, fast stop loss, the stop loss. Your stop loss is an invalidation area. In other words, look at your trade and say, when the price gets to that point on this trade, my trade will be invalid. It'll be worthless. I wouldn't want to take that trade, even with your money. So at that point, this trade's useless. That's where you want your stop loss. Put your stop loss there. Then work out how much is $1,000 back to my cost. How many lots can I buy? How many pips, whatever it might be. Now you know the size of your trade. Back to the cost, you take the size of the trade. And once you've got the size of that trade, now you know you've risked $1,000. Can I make more than $1,000 in the profit? Can I make more than what I'm risking? Because it's a sign of insanity if you are targeting a $100 win or a $50 win with $1,000 risk. Don't you think? You want to be targeting more than $1,000. I don't say to you that it has to be 2 to 1 or 4 to 1 or 3. No. You can have any win that you want as long as it's more than $1,000. If you make $1,100, well done. You make $2,000, much better. Easy. That's all you've got to do. Nothing else. All you've got to do is pick the size of your trade and make sure you can make a little bit more on the win and you're losing on the loss. And understand that every single trade that you take is costing you $1,000. So if you lose it, you've paid that's gone. If it goes into profit and it's like $700-800 in profit, take your stop loss, move it up to cost. Guess what? That trade's free. It is no longer costing you any money. And don't think when it goes back and takes it out at cost that you've lost that money, because you don't go, oh, I made a profit if it goes into the loss, and then you start doing all that dollar cost averaging stuff and moving your stop loss away, and then it comes back up to costs and you get out and you go, phew, I got out of that one unscathed. But you don't go, oh, I made a profit. No, you don't. But when you go into a profit and then it comes back and takes out that stop loss, you go, oh, I made a loss. No, you didn't. You should go, phew, that trade didn't cost me anything. That's what you should be saying. Change your mindset around. Follow your winners up. Try and add to the winners when it looks good. Try and make more money on the winners. The more you make on the winner, that's where the gain is. And the losses, if it goes into a loss and it's $200 in a loss and it hasn't reached the $1,000, but you look at the trade and you think, this one's not going to work. I can see I've made a mistake here. Take the $200 loss. Go, let it go. Take small losses, not big losses. The smaller the loss you take, the better it's going to be for you. Guys, for those of you who want to trade of the day every day and other perks and things that go on in the background, and you want priority replies on your comments, and maybe even there are some different things there where I even allow direct conversations on those memberships. Go and get yourself a membership, go and join the channel, support the channel. And also, if you don't want to go that kind of distance, at least subscribe to the channel. Subscribe, join us, be part of the channel, man. And join us on the live shows every week. Tuesdays, I have them at 1100 GMT plus 2, and on Thursdays at 1400 GMT plus 2 for you guys, so that you guys can learn something, so you guys can pick something up, and you can kind of learn from my mistakes. The end of the day, it'll help you somewhere down the line, most likely. Don't forget, thanks for watching. Keep your feet on the ground, reach for the sky, And I'll see you guys soon. Thanks, cheers, ciao, and bye.